Okay, folks, we've got a trade coming up here on just looking at this 1 hour chart. I'm just going to show you this 1 hour chart. This high here is 126.70 on the euro, and we're going to look at our British pound chart, and we've got a high here at 184.71, and price is moving towards that high. We're just going to mark it, but we're going to go back to our euro and put a trade entry in here. This one we may just get a nice little bounce here, so let's just put our trade entry in here. Parent and contingent order. We've got a limit sell order. Limit sell at 126.69. Limit sell for 10 lots. A stop at 85. So we've got a 16 pip stop, and our first profit target is going to be, we've got 56, 54 is our first profit target. Actually, let's make it 54. Where's our high here? What I'm going to do is this is find out where our potential bounces are. We've got at 40, we've got 50, so we could bounce at 50, and we can bounce at 40. So our ranges, so 50, we're looking at 50, come back to 50. I'm going to put it at 54 for now. Just trying to get a little bit out of this one, and we'll watch and see what happens. Scaling it down to a smaller time frame. We want to keep this. You see this white this white line here. We want to keep this in view. Let's just scale it down. Let's see what our 30-minute chart looks like. And our 5-minute chart. And you'll have to excuse me while I move over to my computer, my other computer. This is a pretty big 5-minute move from a low of 42 to a high of 65, and we'll just look over here. It says here that we're just looking at this OFX news feed here, saying that there were large offers coming into euro at 24.50, as you can set 26.50, as you can see here. That's pretty obvious, and there's a layer of stops around 126.55 to 60. That's short stops is what they're saying. Though the key level is likely to be 126.80, the range high of the past few sessions. Given the reemergence of sovereign activity and with the overall sentiment pointing toward US dollar's topside, speculator exhaustion and failure ahead of here appears likely prior to another downside push. Whether the pair has the legs to overcome the 2500 to 50 bid zone remains another matter, with Friday's durable goods orders appearing the most likely trigger to take the pair out of the past few weeks' range. And 0.4 month-on-month rise is expected after April's 4.4 month-on-month plunge. Series in terms of okay, it's just some speculation as to what's causing the move, and what this is giving a summary of sort of one of the components, minor as it may seem, that is contributing to the move. And unfortunately, it's not looking like we're going to get. Let's have a look here to see where we are. But so we need a spike up here to 126.69. I'm just going to stick to the one chart here for now, and 126.69 seems to be a reasonable place for a bounce, and we will come back shortly. Okay, I just wanted to, I had to pull these other charts over here onto this computer. And just to give you a bit of a different perspective here, I want to show you one thing. This is our central pivot for the day. We've moved up to R1 and R2. Price is now moving towards this 126.70 level on the Euro US dollar. And we are late in the session, 9:13 a.m. June 21st, Pacific Standard Time. We'll just, one other thing I want to show you is this. You see this swing from this low to this high right here. This is our key reversal. First upswing, retraces to 50%, doesn't matter. Anyway, we are now at the 162% extension. And that is a point of exhaustion for this move. Therefore, I expect that price may be sensitive to this level, which is the intra-week, the semi-intra-week high within the last, it's been within the last 5 to 10 days. And so this high is likely to be respected as price moves above. And I want to show you what's happening with pound. And the pound is actually just still sitting in this tight consolidation, and it's well away from its recent highs. It has been somewhat of a laggard. And looking at the Swissy has is also well away from its other significant highs and lows. In fact, it's right now it's sitting right at a 62%. From this low to this high, Swissy is sitting at the 62% retracement level, looking like it wants to make another spike lower. And going back to our Euro chart, looks like our order is going to get taken in here. And again, looking at this high, and we're moving beyond the day's range, beyond R2. Moving back down to our order. This is a 5-minute chart, and our order is going to be taken in shortly. This is a euro, and it's moving very slowly, and the ranges are narrow, so I would anticipate that if we get taken in here shortly, then we're protected by the 80 level. And I think it will take some time before the profit gets taken in down here. I prefer to make this type of trade on the British pound, but we're doing it on the euro today. Here's our Swiss franc 1-minute chart. for you scalpers. But we'll just keep an eye on the euro here, as we are going to be taken into our trade here quite shortly. And what I want to show you is I want to show you the bounce. And the reason why I usually have the 5-minute chart up during these live trading sessions is I do my analysis on the larger time frames, but sometimes I like to have a close-up look on the 5-minute chart to see what's happening on this smaller time frame. It just gives me a little bit of a better feel for what's happening. And I know where my tools are, I know where my key levels are on the larger time frames, and I don't need those reference points when I'm on the 5-minute chart. I can simply scroll back to my other time frames. Now we can sit here and watch this because we're real close to being taken in. This is our working orders window. And this order is good till canceled. 126.69 is our entry price, with a stop at 84 and a profit level at 54. 15 pip stop, 15 pip limit, just going for a real tight one here. What I'm going to do with these working orders is I'm going to separate it from the window. That way I've got it at my immediate disposal at any time. Price slowly moving toward that level. I would like to see a little bit of liquidity, because if there's thin liquidity and there are some stops above this level, then we could see a push through to 80. Keep in mind that this stop here is at 15 pips above this level, and we're buying back a short position. So if we move, dealing with a 3-pip dealing spread, if we move within 3 pips of this order, we get taken out of our trade. So the stop is effectively 12 pips, but the cost is 15. All right, we just got taken in our trade, and let's have a look. Just going to watch the bounce here. What I want to look at is I want you to see here, you see the pip profit and loss. That's what we want to watch. We start on a dealing spread of -3, and I just want you to watch how price behaves in relation to our previous high. We're seeing some struggling there, some selling pressure. What I don't like is how price consolidated here. It's kind of like a bit of a wind up to move higher. But what price needs to do now is the bulls need to see price trading above 26.70, which is that previous high. Maybe we can get more of it on this 45-minute chart. And the bulls, you see this high right here? The bulls need to see price trading above this level and holding above this level. So the dealing ranges for the institutions need to hold above that level. And right now price is struggling to hold above that level, as we can see clearly. And let's take it down to a smaller time frame here. You can see our price is struggling, and watching our open position, we're now at net zero, and it hasn't taken us long to cover our dealing spread as we watch price struggle to move above this high. And we've only really seen price move 2 pips beyond our entry, and I really don't want to see it from here. I don't want to see it start trading above this level at all. I need to see price holding below that 126.70 level. And the longer this holds below this level, then the better that is for our trade. We are late in the session. It is past noon now, New York time, and liquidity is drying up. London has gone home. Flows are starting to dry up a little bit. There's been quite a bit of choppy price action today and indecision, and then this breakout late in the session, which really lends to a nice trade when we see it at previous resistance. We are going to, I think we'll just sit here and watch it for a while, because what I want to do is I want you to just get a feel for this price response, the price response to that high. And there's a couple of factors that I should point out here, and that is the considerations for this trade are really fairly limited, to be honest with you. There's a couple things. There's this high right here, which is a recent high, and this recent high, as price has only really kind of maintained kind of a consolidation. We see this real choppy reversal formation down here, and this is like a sign of a reversal. It's quite choppy, but again, if you recall, our Fibonacci extension level price rallied, retraced 50%, resistance becomes support, and we are now on this reversal. You see this big swing down here. You see how it gets the move is moving faster here, then it slows down and it gets slower and slower, and then we have a spike, this tweezer bottom reversal here. Tweezer bottom fails to hold below these lows, then we get a rally. This is our key reversal leg here. Then we get the retracement from the key reversal leg, and now we're at the exhaustion point, the 162% extension exhaustion point of the from the key reversal leg, which is the second leg up, which is usually the largest or the strongest leg. This 162% extension happens to converge with the most recent significant high. Let's bring back our open position, and we're up 6 pips now. So for those of you who like to scalp, these kinds of trades are very good for scalping. If you just want to take your 6 pips and go, then that's fine. This could potentially be this could be a key reversal point as well. And maybe what we'll do is we'll change our order entry to make the adjustment for that. Now, what I want to do is I want to take you to, and you have to pardon me because you see our bounce here at these highs. Actually, this feed This feed went as high as 70. All right. So the feed went to 70, but I want to show you something. Actually, let's just use the 60-minute chart. I'll just compress it. All right, now you see this sort of resistance level here. If you just move it up a bit to 2700. 2700 is really a target area, to be honest with you. See this all this level of support right here, and then you see this downswing from here down to here, and the retracement. 2700 is the 38% cap of this level, and so there's some vulnerability here with this high being the high that we've traded this high right here. Quite unlikely it's going to get to 2700 today. That's an ideal short, but I just don't think there's enough juice in the market to get there, and that's why we've traded this high right here today. It's the bounce may not be as significant, but this could ultimately be, you see this level of resistance and support here. If price turns here, we could see a real sizable move as a result, and that's why I think it would be prudent to hold on to a percentage of your position here. Let's expand it. I think it would be prudent to hold on to some of your position here as we take some profit, because we may see a real nice retracement and a new trend continue at this level. Let's just go back to our software. I want to get rid of something here. We're coming down, and I put the profit level here because you see this high right here, these highs at 50. I want to take our profit before it gets to these highs because we're likely to see a bounce here, and that's why I put this profit level 4 pips above the high. There's a 3 pip dealing spread, so it's also to account for the spread. And I'm just going to leave it here for now. We are currently up 7 pips on the trade. I'm going to get rid of some of this information. We don't need the value date in there. We don't need the account ID in there. Make the window smaller and more convenient. And keeping an eye on our working orders. We're now up 10 pips, and price is moving aggressively towards our target. And we're up 11 pips, and we've got a 15 pip target here. But what I'm going to do is I'm going to, this limit order, what I'm going to do is I'm going to change it. I'm going to change the position size down to 8, and that way we have we'll have 2 lots open. We will have 2 lots open once if we get taken out, we'll still have 2 lots open in case the market decides to keep going. For now, I'm going to leave my stop at 1 million and just wait to see what happens. And once the order, if we take some profit here, then what I'll do is I'll adjust my stops and my limits accordingly. Let's have a look at our Euro charts. And just want to have a quick look at the daily chart here. Don't know what I've done with my daily black and white. And here's our daily chart. You can see here that we're moving to the high of the range, and a nice trade short is a logical trade at the high of the range, as this is something that we discuss continuously. This is just again just a broader view of what we've looked at. As I mentioned, I like to see price come up more to this 2700 area. I'd be more comfortable, but instead we've only really just come to this range high right here, which is lower than this range, and just playing this bounce right here. It's a logical move, but my hesitance is that the range in the euro is just not that strong, and I don't know how willing it's going to be to give us our 15 pips even. I mean, we're even going narrow here. We're only just going for 15 pips rather than the 20 that I would normally go for. But I want to get a quick just get a quick buck out of it at the start, and then if it decides to continue, then we can just leave a little bit in there. Again, having a closer look, our profit target is just above these highs right here, these dealing range highs. And the only way that we can get profit here is that if we got a good fill, and if we got a fill right at the very top of this move, right? And because once it gets down here, you're going to see this thing bounce, and it will bounce, and hopefully it moves low enough that it will fill our first profit target. Having a look at our weekly charts, you can see here we're stuck in a range right now. On our monthly chart, we're in a range. And on the weekly chart, we are forming a looks like a tweezer bottom, which the tweezer bottom clearly does not support the possibility of a continued move downward, but we're going to go with it for now, because even if we move to the bottom of this range, which is where your next profit target would be, the bottom is 25.36, which can give us over 100 pips on the move. Having a narrower look at it now, we see that price is just simply struggling. It's more or less just consolidating, and we may have to wait for price to just sort of drift around a little bit and anticipate that at some juncture it's just going to spike down and test these levels. It usually fills the numbers, and what we mean by filling the numbers is that it will come down and test here at some stage. We'll close off for now, and we will come back. And we'll come back shortly. All right, just want to give you a trade update here. You see here how the price we made our trade here at 26.69 right here, and price had first bounced and came down here to within 3 pips, 2 to 3 pips of our target, of our profit target. Then price spiked up back through and maybe did a little stop running, And on the hourly chart, we see that price did not hold above, but we're going to take it down to a smaller time frame. But you see this weakness here and how price has since started to fall. Well, our stop is above 80, but let's take it down and have a look. This is once again, it's a 1 hour chart. Here's our stop at 84, which was a 15 pip stop. And what I want to do now is you see how our profit level is, we're just above these, like this notable high here and this notable high here. And as we turn it down to a smaller time frame, we'll bring it down to a first a 15-minute for you. And you see this level of support here. The problem with our limit right now relative to this level of support is we need to see this support price break through support to pay us, because we need a 3 pip to cover the 3 pip spread. And but I need my profit target to be above this level here, above this line right here, which is around 49, right? And let's take this down to a 5-minute chart. And here you see our sensitive levels are right here. This is a sensitive level. It's 49, 26.49. And this low here, which is 26.54, came within 3 pips of our profit level. Now price is virtually, I think, but what we'll do is we'll just wait a little longer to see what happens until the New York equities market closes. Then we'll make a decision at that point. Yes, just an update on the trade. It is now the height of the European session, and what happened here is I've had to shut down the software, but what happened here was this consolidation here. I didn't like how time was elapsing and we were in such tight consolidation, so I took out half the position at +6. Then price came up and retested the high and has since fallen. And as you recall, I was sensitive to this area right here, and certainly it bounced there, but it took us out for the remainder of the position. And that's it. We are done with that one. So I'm going to call it a wrap on this trade, and we'll see you next section. I just decided to add this final section. This is where the trade was made. It was made at this high here, okay, at this high right here, and we saw price move slightly beyond it. Then it retested the highs, confirmation, long-legged doji. Then price moved down, but we took our profits in here. We took a small amount in the consolidation, and then we took more profits, but we actually squared our position and took everything out. But the idea behind taking partial profits along the way is because there is always the possibility that this may happen. We saw one leg down, then the second leg down, and the second leg came to the 162% retracement from this swing down, but also the intraday second support level, second pivot support level at 2480, which is definitely a possibility where it can offer up a buy opportunity. But I just wanted to show you that we did square our position or take everything out, and but the reason why I teach that you should take 70, 80, or 90% of your position out in the process and leave a certain percentage in is because if this happens, then you will make more on these down moves than you will in your first collective profits. I just decided to add this final section. Um, this is where the trade was made. It was made at this high here, okay, at this high right here, and we saw price move slightly beyond it. Then it retested the highs, confirmation, long-legged doji. Then price moved down, but we took our profits in here. We took a small amount in the consolidation, and then we took more profits, but we actually squared our position and took everything out. But the idea behind taking partial profits along the way is because there is always the possibility that this may happen. We saw one leg down, then the second leg down, and the second leg came to the 162% retracement from this swing down, but also the intraday second support level, second pivot support level at 2480, which is definitely a possibility where it can offer up a buy opportunity. But I just wanted to show you that we did square our position or take everything out, and but the reason why I teach that you should take 70, 80, or 90% of your position out in the process and leave a certain percentage in is because if this happens, then you will make more on these down moves than you will in your first collective profits.